following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope everybody out there is having a fun and exciting and indeed a profitable trading week. My name is Mark Longo from the old OptionsInsider.com, as well as many of the programs here on the Options Insider Radio Network. And I am joined today for our Option Block All-Star panel. First off, with a returning regular. It's been a while since he's been on, certainly since I've been on when he's been on at the same time. I believe he did one show in the interim when I was on vacation, but now he's back and ready to rock. He is, of course, the man from the mountains, a.k.a. Uncle Mike from Know Your Options, Inc. Uncle Mike, welcome back to the show, sir. It's been too long.
It has. It's always good to be back here with the old gang at the Option Block. Always exciting and happy to be here.
Glad to hear it. And how is everything going on the old home front? Just give our listeners a brief update.
Everyone's recovering well, so appreciate all the kind words that people spoke on the blogs, and it's always nice to know that there's people out there thinking of you. So many thanks to all of our clients and all of the Option Block listeners that have said kind words. It's a very gratifying feeling.
And we're glad, and indeed I'm sure our listeners are glad that you are back on the old show, sir. It hasn't been the same without you. Let's just say that.
Yeah, and I have to say, just with what my wife and I went through, the word expiration has a whole new meaning now. It's much more respected than it was in the past.
I suppose that's one way to look at it.
Gotta laugh. That's just it, you know.
And then we are also joined today, because much of our panel is actually off at the old Traders Expo in Vegas this week. We are joined by a newcomer to the old Option Block All-Star panel. He is holding down the hot seat over at Options Express, and he is Nelson Cordova. Nelson, welcome to the show, sir.
Thanks for having me, Mark. It's nice to be here on the Option Block with you guys today.
And Nelson, since this is your first time on the old All-Star panel, why don't we give our listeners out there in the audience a brief rundown of your history in the options biz?
Certainly. I started at customer service Options Express out of El Paso, and then from there moved into Brokers Express as their cashiering officer when the company was first being founded. Worked my way, got my licenses, and worked my way into the corporate office in Chicago, where I now manage the trading desk. And this is where I've been for a while, and it's working out pretty well.
I think a lot of people, when they think of Options Express, they think of customer service, and they think of it all being in Chicago. They don't realize that there is indeed that large operation out there in El Paso that is answering a lot of your customer questions and concerns on a regular basis.
Absolutely. The phone calls, the live help, the global support that they provide through that live help. It's a lot of the customer service work being done there in El Paso.
All right, and with our team assembled and newcomers in place, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss what was moving the markets, what was trading, what caught our eye in today's activity. And it was a move to the downside today across the board in most of the major indices. We saw the S&P down nearly 2%, or about 21 handles, to 1216. We had the Dow down a little over 1%, or 134 to 11,770. The Nasdaq down 2%, so was the leader to the downside today, down nearly 52 handles to 2587, and the good old VIX cash up a little over a point to 34.55. And given the activity today, I think a lot of people thought maybe the VIX would surge a wee bit more, but we didn't exactly see the massive pop in VIX I think a lot of people have been expecting, probably partially because we've had so much already net buying activity to the downside in the SPX that has kept the VIX somewhat buoyed despite all the other activity that's been going on in the market. So this is probably just a tail result of that. Of course, we saw some good news to start the day off this morning. We saw housing starts better than expected. I know housing starts is usually a pretty strong indicator, a pretty strong mover for the market, but yet the market seemed to pretty much shrug that off overall today. It was just a bleak day for the most part on the street. We did, of course, I know, Uncle Mike, you like looking at those supports and resistances in the S&P, and we did break through a relatively key support level, which was, of course, 1225 in the S&P today. So did that set off any alarm bells for you today as you were watching?
You know, in the SPX, what I think is interesting, we're touching the 50-day moving average right now, or we're right on the cusp of it, if you will. And whether that's holding things up or not, who knows? But we did have buyers come into the marketplace towards the close of the day today. So I'm actually, I'll give my 50% guarantee on this. I'm not actually, and I think I don't know if we're necessarily at the bottom, but I'm not really too scared by what's going on right now. So, but once again, that goes with my 50% guarantee.
So Nelson, since this is your first time on the show, I don't really know where you hail from in terms of if you're a technical guy, a fundamental guy, if you like just purely watching the options, or if you're more of an underlying kind of guy. So what was your 2 cents today on the activity we saw in the broad market?
Well, what I saw today when our customers was a lot of uncertainty, a lot of rolling, getting out of current positions, not knowing which way to go, asking for a lot of advice. How far do I need to go out to be safe? Essentially, the short call holders having a lot of difficulties gauging just how low things could go. So if anything, my consensus would be I don't think there's a bottom yet. There's a lot more downward potential from what I saw with our customers today.
Yeah, that seems to be the sentiment, at least across the board, at least from everyone except Uncle Mike, who is a little more perhaps rosy than a lot of people. We've, of course, been seeing a lot of net unit put buying for the past week or so in the S&P, a sure sign that there is some prepping for the downside here. We also saw the VIX staying relatively strong despite some other moves to the upside and not coming off as much as expected in those moves, because there is indeed a lot of net buying out in the S&P to the downside right now, which has kept it relatively strong. So there is indeed a lot of preparation out there and some anticipation, if you were, that we probably are perhaps headed downward, and all the developments out there in Italy and the rest of the Eurozone just seem to be contributing to that on a regular basis. Uncle Mike, since it has been a while since you've been on, of course we can't go any further till we know what how the BBI is stacked up for today.
Oh, not too bad. I mean, it's like on days like today, it's not that stressful just because of the fact that most of our longer term positions are hedged. So it was somewhat of a relaxing day. Typically when the BBI goes way up there, it's when we have a parabolic move to the upside, and I'm rolling calls this way and that. And that's usually a more stressful day. But getting back to like what I was saying earlier about the market to the downturn, I do want to mention that I'm part of the preparation in case we do have a downturn. I'm just looking at this, and the fact that the whole world thinks that we're going down, I guess that's kind of what makes me bullish.
Yeah, usually I'm on the same tip. I'm a bit of a contrarian myself, but I tend to I've been leaning this way for a while, so maybe I led the herd, so to speak, in this one, or at least I was there before it became cool to be anxious and bearish to the downside. But of course, we had Monday Mike / Auntie Mike on the show last time, and he made some interesting comments. Speaking of your long-term holdings, I thought was interesting. I thought when next time you were on the show, I wanted to hear what you had to say about that. Of course, we were talking about Apple, as we are wont to do on this show, and we've discussed several times in the past whether Apple was somewhat pegged around 400 and it would drop to the downside around 375, then bounce back up and head up to 415, and then drop back down and keep hovering and vacillating around that 400 level. It since has moved to the downside, and it's been staying around this 375, 380 level for a while now and been vacillating around that. And I heard some interesting comments from Auntie Mike that he thought maybe this would be this time to start scaling back and unloading some of those Apple positions. And that surprised me, considering I know how bullish you guys at KYO have been in the past on Apple, and since I know your holdings you have quite a few holdings in Apple these days, I'm curious if you share those sentiments over there. You're going to start maybe tightening up the old puts, and maybe if this keeps dropping, just let the stock go.
Well, where we're at right now, I'm not quite ready to give up on it yet. What our position is on it right now, we were right after earnings, we rolled and we got into where we were long Apple and then long the 400 put. And my thought was that it's either going to make a significant move either to the upside or to the downside. So I didn't want to collar it just yet, but I wanted to still have a near 50 delta on the stock for the time being. And so naturally, Murphy's Law dictated that it would stay the same for a while. Thank you very much, Apple. So I had to eat up a couple of weeks of time decay.
What fun would it be if it didn't just hover there for a while?
No, kid, especially when you're long at the money premium. So with that, what we were able to do, Apple had its move downward and really wasn't in a position to sell any covered calls on it. So what we did was we sold a November 375 put, kind of diddled around the area. Diddle, that's my advanced technical term. I just realized it kind of stayed around the area where it was for a while, the low 380s, and we were able to take profits on that. So we're profitable on the put position right now. The puts are in the money, and I am not too anxious to get out of the in the money puts right now. I'm not looking to roll down. I'm not in a great big hurry to do so. What I'm looking at right now is to just I want to stick around in Apple for a little bit longer. And I know that there's people out there saying, oh, that's the kiss of death for any trader. He wants to stick with it a little bit longer. But I'm protected to the downside. It's mathematically impossible for me to lose any more than just a little bit of time value in the December puts. And so with that, I still think that Apple has a chance. The reason that it had its big pullback a week ago was because of the fact that they didn't have the demand, or they didn't have the ability. They had some plant in, I forget where it was, in Thailand, that was having some problems producing the latest version of their latest iDevice.
Yeah, there was severe flooding out in Thailand.
Yeah, and so with that, that's something that I think, just as a business owner myself, stuff like that's manageable. It's not good by any means, and it's a problem, but the demand for the product is still there. And when you have demand for the product, things can get better. And so I'm looking at that as, yes, it's a stumbling block. It's not good by any means. It's bad, but that's something that you can work with. So I'm not ready to quite jump off of the Apple train yet, but I'm not near the bull I was 6 months ago on Apple. Definitely the bullishness in me has definitely gone away very significantly.
Interesting. So even the most diehard of the Apple bulls are starting to question the Kool-Aid. Perhaps it isn't as tasty as it once was. You know,
man, it was some good Kool-Aid for a while.
It was good Kool-Aid for a while. I won't hold it against you, even though I've been bearish for a while. That drinking that Kool-Aid has worked out fairly well over the past year or two. Of course, I made a joke about a week ago on the show that if you had an iron constitution and you were indeed one of the few premium sellers in Apple around the 400 level, you actually did all right for a few weeks there because it kept vacillating back to that point. Exactly what you described. You were long the 400 level, so you were feeling the pain. But of course, we've since have moved away, and one of the few periods where you could have actually done all right as a premium seller in Apple at least seems to be over, at least for the time being, on that 400 level. It's like we're hanging out here. Maybe this is the new level to vacillate around for a while, 375. I guess that brings up the longer term question. I guess long term call or put here, 375 level. If you had to be long one, I know you're waiting for a December expiration before you make your ultimate decision. I haven't come down one way or the other yet either. Though I think if I had to wait long term, I have to start leaning towards the put side of that equation, I think. Of course, I've been wrong betting against the Apple bull before, so why should this be any different? And of course, there's been some other interesting activity and some other names out there that I know, Uncle Mike, you like to follow quite a bit. Of course, Ford taking a bit of a shellacking down today, down nearly 4% to, or 40 cents to $10.17, despite the fact that they had some decent October sales numbers. I know we've been trading in and out of Ford a lot. I know you have been as well. I think we pretty much just have some underlying and a long 1x2 put spread actually on in Ford right now. So that's pretty much, to have long at the money premium in Ford for us is unusual, but that's the position we have right now. What are you guys rolling in Ford right now? You still long a bunch of underlying and some downside puts, or what do you have?
We got a hodgepodge of a lot of different things for different people on it. I got out at 1070 was my mark yesterday. I got out of our short 11 November puts and then rolled down to the December 10 puts, and we did it for, I forget, I think a 7-cent debit. So usually I wanted with everything, all of my might. So I wanted with all of my heart to be able to stay in that November put, but thank God I didn't. Just based on what happened today. But yeah, I'm still a bull on Ford, and I've been doing all sorts of little things to try and just generate income somehow, some way on it. But I think Ford's like anything. It's if the market goes down a little bit, Ford's going to go down a lot. But if the market goes up a little bit, Ford's going to go up a lot. So it's kind of like a steroid stock, so to speak.
Yeah, it's a fun one to watch, and we don't typically have many underlying holdings, but we did have some residual underlying in Ford back when it was trading up at the 12 plus level. I didn't want to get rid of it, but I didn't want to leave it sitting there naked either, so we ended up legging into the I think it was the Dees 1110 1x2 put spread, which was great for us because it took us all the way gives us down to the the 9.5 or so range on that stock where we're relatively protected. And like I said, we've talked about it a number of times on the show in the past where I don't mind adding to an underlying position in that 9.5 or so level on Ford. That's a position you can do a lot with. You can leg into a lot of different spreads and generate some income on these in the short term and long term. Of course, I think you and I are both agreed that we are both bulls on Ford in the long term. A lot going on in Ford that you can trade in and out of. Did you get a lot of customer activity on Ford today, Nelson?
Actually, Ford was not on the radar today. There was a lot of Apple, though. I'm actually going to disagree there with Uncle Mike a little bit on not rolling down that short put, though. Today, I was able to get out of a November 375 all the way to a December 325. Picked up another dollar credit. $50 worth of wiggle room and $1 for it. Don't know why we wouldn't roll out when safe money.
Oh, sorry, I have a long put.
Oh, long put. Sorry.
Yeah, I got a long. I'm long the put, long the stock. Sorry about that.
That's why. Now I understand. Okay.
So I guess you agree, kind of, but just in a different strategy.
Yeah. Took the 375. Thought a couple days here. That's close enough. 377. Went ahead and rolled it down to 325 for December.
Yeah, Uncle Mike, as you'll learn, is actually a degenerate premium buyer in many cases. He's long a lot of premium out there. But yes, I forgot, Nelson. I didn't give a chance to give you your 2 cents on Apple. So you're one of these premium sellers out there in Apple. Then it's been an interesting road for you. Is this an ongoing position you've had, or did you just dive into Apple recently?
This is a more recent position. The current volatility is what attracted me. There's too much uncertainty at first. Now I think I got a good handle on direction, and the premium seemed to be working in my favor.
Yeah, I can't argue with you there. 325 seems like a decent level. I don't know, obviously, what vol and what price you got in at, but obviously it's, from an overall macro level, it's a decent level to be playing with right now. Of course, and before we go, Uncle Mike, it has been a while since you've been on the show, so it's been a while since we've had a good metals rundown. So give us I know that's the bulk of your day, so give us your commodity/metals rundown for today, sir.
They went down today. That's not supposed to happen.
I don't even know what you're talking about. Metals can go down. They don't ever turn red on my screen.
Oh, man. Good thing I'm colorblind, or that would have scared me seeing red stuff on the metals. But we went down today. It's one that it's a little bit choppy, and when you have markets like this, it's going to happen. There's going to be a lot of headline risk, and there's going to be a lot of movement and such. Silver was actually one that was kind of surprising in that I was actually, as a short-term trader, as it went below 32.5 today, or around like the 34, the 32, 40, 32.50 area was a level of support that I had on what I was looking at. And as it went below that, I was actually becoming somewhat bearish on it. I kind of was like contradicting myself just from my short-term sentiment versus my long-term sentiment. And then naturally it went lower. But one thing that I am seeing, though, I'm seeing a little bit of a level of support in the silver, and I'm looking at SLV around the 30 level. So with it, I think it went down. But the thing with the beauty about silver, it's kind of like weather in the Midwest. If you don't like the direction, just wait about 10 minutes and it'll change.
Yeah, that's pretty much the metals landscape these days. They, if you want a position, just give it a few minutes, and you'll usually get a chance to leg into it, particularly if it's to the upside.
Yeah, it's just definitely, it's a lot of choppy waters too. That's for sure.
Yeah. All right, that is going to do it for the trading block. Unless Nelson has anything else that particularly caught your eye in today's activity that you'd like to discuss.
Well, just adding to the metals real quick, AGQ is gaining a lot of popularity for those short-term trades like that. I mean, once you're trading an ultra short-term, you can really make a difference.
Oh, that's one of the these ultra short silver here.
On silver, exactly.
Yeah, and I know it's interesting. These ultra ETFs are popular, particularly with a lot of traders who maybe don't want to dive into options yet, so they use the ultras and the levered ETFs as a options surrogate in many ways to get some of that leverage. I know you guys at Options Express and many other brokers have clamped down on the amount of leverage you allow your brokers or your customers to use in these ETFs now. So what kind of margin does someone have to play with to come into trade options here at on the AGQ over at Options Express? I'm sure it's an enhanced margin level, is it not?
You can certainly still be able to trade the options on these and benefit from that leverage, of course. As far as the current ones, on AGQ, we've got an increased requirement of only 15%, but we're still giving a 35% margin on it.
Okay, that sounds like about what I expected. But yeah, these ultra levers, I know Uncle Mike prefers the straight up SLV these days. I don't think you play in many of the levered ETFs, do you, Uncle Mike?
Very seldom. I thought if I'm going to do that, I'd prefer just trading a futures or a futures option contract. That's my preferred method.
Yeah, I tend to go that way as myself, because quite often when you look at these levered ETFs, you have to really dig into the prospectus to see exactly how they're achieving that leverage and what the actual leverage is and what they expect, because so many of these things are constructed in, let's say, dubious ways that are probably not the way I would construct them if I was doing something similar.
Well, you can. I think they have a place for someone who's a beginner, like you said, that isn't quite ready to get into options. And as a beginner, yeah, I think it's okay to maybe take a look, understand what you're getting into, obviously. But I think that if you really have a good, firm understanding of futures, I think futures are a better route to go. I personally think they're a lot simpler, but if you don't understand futures, then I guess that would be a problem.
Yeah, it's definitely a good entry point for people who maybe are a little bit wary about diving into the futures or options market. Hit the levered ETFs, and they're a good way to get your feet wet, as it were. All right, that is going to do it for the old trading block, and now we're going to roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is, of course, the portion of the show where we discuss the interesting and or the unusual options activity that is lighting up the tape today. We're going to kick things off with a newcomer to the odd block today. And it's too bad Sebastian isn't here because it falls right into his wheelhouse. Good old Ann Taylor stores. I know he loves the ladies' retail outlets and the fashion outlets. You can't get enough of Ann Taylor and Chico's and all those other ones. So I'm sure you'd have some interesting comments about this one. But Ann Taylor, ticker symbol ANN. They closed today at $25.31, up about 40 cents or about 1.5% today, and this is the name that usually does relatively light volume. They usually do about 1,000 contracts a day. They did over 12 times that today. They did about 12,000 contracts, and the reason for the bulk of that volume is that, of course, they have earnings tomorrow before the opening bell. So if you wanted to get in on earnings, you had to put it on today. And we saw some interesting activity in Ann Taylor, particularly in the front month here, with an opening sale of over 4,000 of the Nove 25 puts. These went up for $1 today. So this is someone who's taking a big flyer here on earnings that Ann Taylor shares are going to hold where they are or head up to the upside. Of course, he's willing to pick up about 400,000 shares if these earnings turn to the downside, and he's willing to pick them up down in the 24 or so range. And of course, for a name that does 1,000 contracts a day, this one trade alone was about 4 times the average daily volume. We also saw about 3,000 of the Nove 24 puts going up today. Yeah, we saw mixed activity here on the Nove 24 strike as well, not as clearly delineated as the Nove 25s. We saw about 3,000 of the Nove 24 puts going up, but they were relatively mixed between buying and selling. No large blocks going up like we saw on the Nove 25 puts, but definitely on the 25 handle, one size seller putting his money where his mouth is, so to speak. So any of you guys watching Ann Taylor at all or have any interest in Ann Taylor earnings before the bell tomorrow?
No, but I think it's pretty courageous selling premium going into the earnings like that.
Well, it went out so far. It's in his favor a wee bit. They went out 80 at 95, so it's starting to go his way. And but yes, I agree that this is an interesting play for hitting a 3-day option for $1, and then seeing how the earnings, if they come down your way or nay. But yes, not an interesting trade going up for relatively comparable size here in Ann Taylor Stores Corp. And then we're going to roll on to another newcomer to the odd block. It is Louisiana-Pacific Corp, ticker symbol LPX, and they closed today at $7.18, up about nearly 1% on the day today. And what we saw, this is, of course, a company, they make building materials. And so given the activity we saw on the housing starts and the positive news coming out of the housing starts today, not surprisingly, we saw some positive bullish flow here in LPX as well. This is a name that does about, not even 1,000 contracts a day. They do 500 contracts a day. They did nearly 20,000 today. So a sizable day for LPX. And the bulk of that activity, over about 14,000 contracts or so, went up in the December 8 calls today, including one massive block of about 8,500 going up for about 30 cents. Yeah, so the bulk of this activity was, of course, buys. As you saw, a lot of bulls piling into the D8s after the housing start numbers. Like we said, a total of 14,000 with the bulk of those buys today. And looks like they're predicting some near-term upside here in LPX. This is not a name that I particularly follow, but like I said, given the activity here in the housing sector, not surprising that some bulls will be piling in to LPX. It may be surprising the size they're putting on. 14,000 contracts here is an enormous trade for LPX, but still not a particularly surprising the direction that they're seeing here. Of course, no earnings or anything else is coming in over the lifespan of these options, so it's not an earnings play. I'm not sure. I'm guessing, Nelson and Mike, that you guys don't watch LPX on a regular basis.
It's a newcomer to my board as well.
Yeah, that's where we like pulling. Nelson, this is your first time on the show, but we like pulling out some of these obscure ones every now and then just to see what's going on. That's, of course, where a lot of the fun And the interesting, unusual activity is to be found is in some of these little names that do a few hundred contracts a day, and all of a sudden they're lighting up the tape doing 20,000 plus.
Longo's like the Mel Kiper of obscure stocks. They always ask Mel Kiper on draft day who all these players are that no one's ever heard of from Panhandle State. Mel Kiper can tell you everything about them. Mark Longo's that man when it comes to stocks.
I love my little ones.
LPX, no, it is absolutely new to me. Never heard of it till today.
Well, this last one, if you haven't heard of LPX, and this last one is really going to throw you for a loop. I'm sure neither you or Uncle Mike have ever heard of this little company named Coca-Cola. Have you heard of these guys?
No, it doesn't ring a bell.
Same here.
We always like to close out the odd block on the obscure ones. And of course, Coca-Cola, ticker symbol KO, closed today at $66.62, down about 40 cents on the day. And of course, this name does some substantial volume. They do about 30,000 contracts a day. They did nearly double that today. But what was interesting about today's activity of all that 50,000 plus contracts, we saw one interesting longer term trade that kind of caught our eye. We saw almost 5,000, 4,800 of the Jan 2013 67.5 straddles going up today. We saw this trader coming in and dumping, like I said, 4,800 of the straddle for about 1160. This is essentially the at the money straddle here. So we saw one trader coming in and putting on a sizable bet that Coke is not going anywhere for the foreseeable future, at least over the next year. I thought this was an interesting trade because we don't see that many size straddle sales out here in names like this. And of course we don't see that many size straddle sales, at least out here in the long-term straddles. And this one caught our eye. And Uncle Mike and Nelson, if you have different ideas about this, by all means chime in. But what we typically see a lot of times is not just a naked straddle seller on these cases. A lot of times it is indeed a long underlying holder who's coming in on the straddle sale, and they typically will look at maybe selling an at the money or in the money covered call, and then they say, well, maybe I don't mind this level that much, perhaps a little bit more to the downside. I can double my bang for my buck, obviously, and also and double my premium here if I hit this straddle. And if the stock does take a move to the downside, I'm not terribly adverse to picking up more of this underlying at these levels, whereas to the upside, I'm locking into myself a better premium level, a better income level on this name that I expect to kind of vacillate around this level for the foreseeable future, but for maybe a number of different reasons, I can't sell it out right here. So, Uncle Mike, would that be your guess as well as here, or do you think this is just someone coming in and making a naked spec here that Coke ain't going anywhere anytime soon?
That's a pretty sizable naked spec, I would think. I don't know. I've never done a straddle that far out before, but one of the things that we'll do if we're selling covered calls on a stock, maybe that we got called out of and we'd like to get back into it, maybe we're doing it like at certain levels. Like let's say Coke's not a holding that we have, but let's say that maybe we got called out at the 65 level and we want to get back into it, and we still had some of our shares that were still long, then maybe we would sell 65 put to get back into it, and then simultaneously sell maybe a 67.50 covered call as a way of just generating more premium for what we actually have. What I like about selling the straddle while being a share owner, it kind of buffers the pain of the stock going higher, because you also have that short put in there on shares that you didn't own anyway, but you still have to have the margin set aside. And on the way down, it kind of buffers the pain of getting the stock put to you because you have that call going out. So I like it as a way of building a position.
Yeah, I agree, and we typically do see a lot of people doing exactly what you described. They write the covered call to the upside, and they have the put to the downside. And after a while, some people tend to merge the two and just put them on the same strike to collect a little more juice for that upside covered call, particularly on a name like this where they think Coke is just going to vacillate for the long term, and so they don't really mind clipping their upside with a lower strike if they can in turn offset that by the additional premium of having the put. So I think it's an interesting play and one that caught our eye and I think was worthy of discussion here on the old show as a different way to potentially hedge and generate some income on a long equity portfolio. And that is going to do it for for the old odd block today. And now we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Xpress Block. This is, of course, the portion of the show where the boys over at OX take the reins and I get to sit back and sip a beverage and rest my vocal cords. And Nelson, I'm not sure if John and Tim and Rob explained this segment to you. Hopefully they did. Hopefully they didn't just leave you hanging and saying, Nelson, go ahead and show the flag for us. But this is, of course, the portion of the show where you get to illuminate our audience about what exactly is going on behind the scenes, behind the curtain, if you will, over at OX, and let us know what your customers are trading and some of the interesting trades and, of course, the interesting questions that you're hearing over on the trading desk at OX. So without further ado, take it away, Nelson.
All right. Thank you, Mark. A lot of new interesting questions, especially with expiration being just a day away. A lot of concerns about short positions. When is it right to roll a trade, be it a single position? Rolling out an entire condor as a condor versus two trades. Should I go down and out on my puts or up and away on my short calls? What are the hazards? Things like this are the types of questions we're constantly explaining to our customers. A lot of new developments coming in with Schwab and ways of getting money into your accounts a little bit faster. Things people, especially today with Angie's List, coming out. They wanted to get their money in here quickly.
That's true. We didn't even have a chance to discuss in the trading block. Good old Angie's List going public. Yet another tech IPO. It's like 1999 all over again. It's tech IPOs across the board. We had LinkedIn earlier this year. We of course had Groupon a little over a week ago. Just had options on them, so I'm sure you guys are pretty busy taking a lot of Groupon orders. And then of course Angie's List going public today. It opened at 18 and drifted as high almost up to 19, and then it closed today at $16.26. You're saying a lot of your customers were scrambling to get into Angie's List as well?
Scrambling to get that money in here to get in on it. Fortunately, once it came out, I think everybody sort of pulled back. We've learned our lessons already now from LinkedIn and Groupon and such. I think we had our customers were a little more standoffish. Once it opened so high, they stood back and watched on the sidelines. Not too many questions of after the fact. There's more, how do I get my money ready and poised for it? So I believe our customers are learning, and maybe these tech IPOs just aren't what they used to be.
Yeah, I think we saw the scramble, obviously, for LinkedIn. I think partially because that was the first big tech IPO in a really long time, so people wanted to get back in. That didn't have the exact same feel as, let's say, a Netscape back in 1995, where everyone and their mother was scrambling to get into that one. But we still saw quite a few people scrambling and trying to get in on that one. I think they've since, between LinkedIn and then Groupon and now Angie's List coming out, they're a little more seasoned in the process, if you will, and so they understand how these IPOs work. And it looks like you're right. There was a general shrug after the initial fervor here, and people weren't loving Angie's List as much as some of the other recent IPOs that have come up on the boards lately. So Nelson, not to cut you off, what else is going on over in the land of OX?
Well, the most important tidbit I'd like to share with everyone is when you do want to get that money here, bill pay. Your bank offers it. Options Express is listed on it. That money will be here tomorrow morning ready to go. It saves you the cost of having to send us a wire, and it's a lot faster than an ACH. Guaranteed funds ready to go. So when the market opens, so are you. Also, this one's sort of like I touched about it earlier with the whole Apple trade I did where I managed to roll for a credit. When is the right time to roll down and out and up and down versus things like that, hazards and earnings? Another concern, as I was mentioning, with expiration drawing near, customers on the brink there with being at the money or near in the money with their expiring options. A lot of questions on, is it right for me to roll it out? Should I go ahead and take out next month's option? What's enough premium? Difficult questions to answer. Every situation is a little bit different. Main thing is the hazards to watch out for. One you touched on a bit ago was earnings. make sure you don't have earnings just about to come out on something when you're rolling it away, because it might not be a favorable position as soon as earnings come out. It might be best just to close the position, wait for earnings, and then get back in. How much is enough? Short put's another hazard I encountered with the customer today. He wanted to roll the short put just about to what I felt was the lower resistance. Problem was, if it broke through that resistance, he was going to have a really hard time rolling it any lower. So I was worried he was going to offset his loss for this month, and then when he went to do it next month, if it did break through resistance, he wasn't going to have that ability and possibly suffer a larger loss. Small loss right now could be taken and avoid a much larger loss that we couldn't get out of later.
Yeah, we talk a lot here about, expiration week trading and what to do with some of these residual positions. And, our advice and my own advice, I don't want to speak for Uncle Mike here, but my own advice has always been, when in doubt, close it out. When I was a floor trader, we would go into expiration trying to zero out every strike anywhere near the at the money, just because you don't want those residual headaches. You never know if something's going to gap up or down in the final few minutes of expiration day, or indeed in the after hours after expiration day, even though you think it's all closed and said and done. So yeah, if you have any hesitation, I would definitely just close it out. And also the other alternative, of course, is to roll it, providing you're not just throwing good money after bad, and like you said, rolling to a position that may indeed be dubious. But yeah, I'm not sure what you guys say on the desk, but we generally going into expiration week, particularly for a lot of our listeners who tend to be on the premium selling side of the equation. If you have these things that have decayed from dollars down to dimes or nickels, by all means, take the money off the board. Put the risk away, take the money off the board, and live to fight another day. Take your profits and be happy.
Steve Miller trade, take the money and run.
Exactly.
Best advice I ever gave. Nothing wrong in taking a profit.
Exactly. Never be angry when you take a winner off the table. Yeah. Anything else going? Oh, good.
Yeah. Last thing was a lot of complaints, actually. Why did we halt so early on Rambus? Lots of missed time there. I mean, the news broke about the whole settlement coming out, and by the time the customers got to their accounts to put on their trades, too late. Trading had halted. It seemed like they halted trading a little early there.
Is that your opinion as well?
I would say it is. I mean, we made it wait 8 weeks for the whole jury to come back with an answer, and then when they come back, they immediately halt. I mean, let the news that, hey, the jury's coming back get out there so that we could get those trades in before you halt it.
Yeah, you'd think they give you a little bit of breathing room there. I think before we close out the old Xpress Block there too, Nelson, I'm just curious, are you still dealing with a lot of the fallout here from the MF situation? And last show, John Grigos was on, he was saying it was still just a lot of calls, a lot of problems. RJO was having issues, which of course was translating into your guys and your ability to execute for your customers. So is that still causing a lot of calls and concerns for your customers?
As of Monday, we did have one last issue with RJO. We've made it through now, no further issues. A lot of the transfers are coming in, so things have been going a lot smoother, I would say, than last week. A lot of upset customers. We're trying really hard to get them over here as quickly as possible. All sides are working. It's just a really difficult situation with what's happened to these people.
Yeah, not exactly ideal at all by what's going on in the whole MF situation. So glad to hear that things are starting to resolve themselves over in OX land, at least when it comes to this issue. Well, thank you for that, Nelson. That was your inaugural Xpress Block. So did you enjoy it? Was it fun?
I did, Mark. Thanks for the opportunity. It was lots of fun.
See, not as intimidating as I'm sure as Tim and John made it out to be.
Not at all. Not.
All right. And with that, we're going to close out the old Xpress Block and roll right into the strategy block.
The strategy block.
All right, and welcome to the strategy block. The strategy block has been on a bit of a hiatus of late because the man who usually holds court in the strategy block was occupied elsewhere, but now he's back, and the strategy block is back in full form as well. Of course, I'm talking about the man from the mountains, a.k.a. Uncle Mike Tosaw from Know Your Options, Inc. So, Uncle Mike, my little birdies are back as well. My little birdies have told me that you do indeed have an interesting and or compelling strategy / tip / trick for our listeners today. So what do you have in store for our listeners today, sir?
Not necessarily a strategy, although it is a strategy, but it's more of a frame of mind.
Those damn birds have lied to me for the last time.
Well, it is a strategy though. The strategy I actually wrote 3 chapters about this strategy in my book, and with it, I think the more I go through it, the more I like it, and the more of a frame of mind it is. It's the simulated index concept. I know I've talked about it on this show before, but let's say, for example, that I'm bullish on SPY. I've been in cash for a while, and you know what? I'd like to buy SPY at 122 right now, but you know what? I'm just a little bit hesitant to do so, of putting my entire portfolio into the stock market right now. What you can do is simply buy a call option. Let's say, for example, that you bought the 112 call for June. I'm not recommending this trade by any means, but I just want to use this as an example. If you were to buy the 112 call option, 90% of your portfolio could sit there in cash, or you could put your portfolio into a money market, maybe a CD. I know it's not paying a lot. I know that's what everyone's saying right as I said the word CD, but there is something that you deem as safe to where you can sleep at night after a day in the market such as today with 90% of your money. But then you always wonder, well, Mike, what if the market goes up and I miss it? That's what the call is there for. So the frame of mind that I like to have when I'm using the simulated index concept, either for my own personal money or for client money, is that the market's going to go down. But in case it does go up, we have this call option in place to participate to the upside on it. So if we do gain value in the marketplace, I'm just looking at the 112 call option right now on SPY for the month of June, trading at about 16.5. So by having our money in there, I guess technically it would be a little bit less than 90% of your money would be in cash, but close enough anyway. By having your money in there, you have $10 of intrinsic value. That money is something that time decay is not going to touch. And you have about $6.50 in time value. So if that's a concern to you, if you don't want to take on the time decay demons, so to speak, you can turn it into a diagonal spread. You can turn it into a bull call spread of some sort and manage risk that way to where you'll still have some type of upside participation should the market go up, but a good portion of your money is in something that you deem as safe. So if you're thinking, oh yeah, stocks go up throughout time, but I don't want to get in the market now. If you've said that one too many times and you've missed enough rallies in the stock market or the gold market, the bond market, any market that trades options, then I'd consider using options. I know it's very basic, and I know this is something that a lot of people have thought of, but as I've told this concept through my many years in the business, very few people actually buy into this and actually do what I'm saying. Problem often occurs with people saying, oh, well, I don't want to be a part of it anyway, so they stay in cash, they miss the rally. Or, you know what, instead of buying one call option, I think I'm going to buy 7 or 8 of them. It'll be our little secret. They lever themselves, and sometimes it actually works to their advantage, but unfortunately, most of the time it does not. So use options the way they're meant to be used, folks, and this is just one great way with which to do so.
You know, that is the problem, well, not the problem, but one of the problems people take when implementing that type of approach is it does require a certain degree of discipline on the part of the user, and all too often we see people failing in that regard. They come in, they say, why pick up the one call when I could swing for the fences and buy 10? And then that tends to defeat the whole purpose of the strategy.
Yeah, it's sad because leverage is if you're not levered, there's always a chance, in my opinion. When you start leveraging yourself, that's when you got to be very careful.
There you go, and that's why you don't play in the levered ETFs.
There you go.
Throwing it back to earlier in the show there. All right, thank you, Uncle Mike, and can I just say it's good to have you back in the old strategy block chair. It wasn't the same without you.
Oh, it's great to be back.
All right, and that is going to do it for the old strategy block, and now we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, the portion of the show where we discuss what's coming up and what we're watching on our trading screens for the next few sessions and going into the weekend here. And, of course, looking at the old calendar, both from an earnings perspective and from an economic perspective, there isn't too much exactly budging the needle for the next week or so. Not a lot of numbers coming out next week. It's not a very number-heavy week. Of course, on the earnings front, things are also relatively light. A lot of the big names, all of the big players have already announced, so we're not looking to any massive market-moving earnings announcements next week. So not too much on that front in terms of really what is worth watching. So I think the conversation could even go back to a name that I know a lot of our listeners like to talk about on a regular basis. We hit on earlier in the show, and I kind of teased this. Maybe it's a good time now then to dive into it and get everybody on the record. And I'm sorry to put you on the spot, Nelson, here on your first show, but we discussed Apple earlier in the trading block and this 375 level. Maybe we'll make it back at the 400 level just to be safe and even. That's the level we were talking about quite a bit until recently. Of course, there's a little bit of intrinsic value on that put now, so maybe that skews the argument a bit, but c'est la vie. So if we're looking here right now on the 400 level, let's say the Jan 2013 400 call or the 400 put, where would you like to be on that side of which of those two would you rather have in your portfolio right now? I guess we'll start with you, Nelson. Of course, disregard that $25 worth of premium. If you want to go maybe 375, we can do that as well. So you can pick your strike there, 375 or 400, and which side of the fence you'd rather come in on.
Well, going January 13, I'm looking at a 375 put. While Apple's still a great company, I think they're going to encounter a lot of new competition. I'm not sure they're going to have the same type of growth they did with the release of every new product, because there's going to be other companies out there with something equal or even better.
I'll dive in there next as well. Of course, we've already seen some of the sell-off from the 400 level, so maybe we're just going to vacillate around this level, 375 for the next year. But I tend to fall on the same side of the fence. I'll be aggressive. I won't say 400 put. I'll say the 375 put as well. Why get that free $25 in intrinsic value? I'll make myself earn it. But yeah, I tend to lean on that side of the fence as well. We're starting to see a lot of people starting to catch up finally to iOS and all the things they've launched in the ecosystem. We're also starting to see some of the problems cropping up on iOS that have been a stable of Android and are maybe starting to lose some of the luster. I just upgraded to the latest OS on my iPad too, and of course I'm starting to have all these bugs and glitches and issues that we see as a regular occurrence here on the Android world. So maybe some of the luster is starting to come off iOS and Apple as they're starting to expand the product base and starting to deal with a lot of new customers and a lot of new features. Maybe they're starting to encounter the many myriad bugs that have plagued Android users like myself for a long time. So, of course, between that and, of course, the Kindle Fire, not exactly an iPad competitor, but it's starting to look in the rearview mirror, and you can start seeing how Amazon could make a compelling iPad competitor going forward based around their ecosystem there. So there's a lot that I think could lean to the downside, and taking away, of course, the obvious comment that, of course, they've lost their iconic founder. So for myself, looking here at these levels and what we're looking at here, I probably would lean on the 375 put end of the equation. And Uncle Mike, last but not least, is the man who probably has the most skin in the Apple game right now. Which way are you leaning, sir? Of course, you already have the underlying right now, so no thinking of it as a hedge, no looking at the put as a hedge. So disregarding your other positions. Naked, Jan 2013 call or put 375 strike. Which way are you leaning?
I'd still have to say the call, but I'm watching that pretty closely.
So you haven't quite yet purged all of the Apple Kool-Aid from your system, but it's starting to evaporate, shall we say?
It is, and it's one that even at the when Apple was at the 300 level, oh my gosh, that's ridiculous. It still had some room to go, so I felt it did anyway, and it did. But now it's getting a little bit more difficult now, so I'm definitely trying to be as cautious as possible.
Maybe it's time to start focusing our attention on good old Chipotle, the secret apple, as I like to call it. In many.
Oh man, I'm getting hungry now.
There we go. That's why I don't bring it up on the show too much, because it just makes you hungry after you talk about that. But of course, that is going to do it for this episode of the Option Block. We have all the hosts, at least all the hosts that are present today, are on the record now. We'll have to come back in a year or so in January 2013 and see which of us was correct. And of course, I'll allow the absent hosts to weigh in on a future shows if they care to do so. They care to put themselves out there on the old 375 strike. But like I said, that is going to do it for the show. I want to thank our partners in crime here for joining me on the show today. Starting off with you, Uncle Mike Tosaw. What is coming up in the lands of KYO? I'm guessing there might be a nice Sunday night webinar in the future for you.
There will be. I'll be on the Options Express webinar gang Sunday night, spread trading for sophomores. You can find more information on that on the Options Express site. Also, Monday Mike is going to be spending the weekend out in Vegas. He'll be at the Traders Expo briefly. And also, Dr. Duke and Mike Parnos are going to be putting on an Option Royalty Iron Condor seminar over the same weekend. They'll be at the Hampton Inn, and if you guys are interested in that, Mike Cavanaugh will be there as well. So for more info on that, give us a call.
And what is Options Royalty? Is that the name of the seminar they're at? Or?
That's the name of the seminar, yeah. It's going to be Dr. Duke and Mike Parno are joining forces. So it's an exciting thing.
And that's going to be out in Vegas?
Yep.
Okay. So, yeah, listeners can check that out. I'm sure you have a link to it on your website there.
I believe we do, but no. If you're not able to find it, I'm not the website guy. Give me a call. I'll help you find it.
All right. Thank you for that, Uncle Mike. And, of course, Nelson. I'd imagine I know a lot of the OX guys, Joe and Jim, are out there in Vegas as well for the Traders Expo. So I'd imagine that's a lot of what is coming up on the old OX calendar for the foreseeable future.
That's correct. They'll be out there tomorrow, 6:45 to 8:45 at the Traders Expo. Also, we got trips coming up now to Boca Raton, Florida, and down to Austin, Texas, the 10th and the 16th of December. So we'll be out in those areas here soon.
You're a hardcore fellow. You pronounce it correctly, Boca Raton. I refuse to call it Boca Raton for a number of very dark reasons, but I still say Boca Raton like the rest of the unwashed masses. But yes, a lot to keep up with over at OX, I'm sure. So you somehow missed out on the Vegas invite, did you, Nelson?
I did, but I'll probably be down there at the Austin trip.
Oh, that's fun. So you get to go to the Austin show. Have fun down in sunny, warm Texas for me. Well,
that will be nice. Get out of the Chicago cold for a little bit.
Yeah, it must have been a fun switcheroo for you going from El Paso up to Chicago. Was it a bit of a climate shock for you?
It certainly was. Going from short sleeves and shorts on New Year's Eve to scarf, coat, 2 layers of clothes, and still freezing. It was very interesting.
Don't worry, your blood will thicken up after a while, and you won't even notice it. And then you'll be out in a T-shirt in January like the rest of us crazy people. All right. That is going to do it for the old Option Block. I want to thank all of our listeners out there for downloading and streaming and subscribing to the program and making it such a success. And by all means, if you have any questions or comments for us here on the old Option Block All-Star panel, then by all means, surf on over to theoptionsinsider.com and click on our forum tab there, our newly redesigned optionsinsider.com, I should say, and click on the forum tab, and you can scroll on down to the listener questions for the Option Block and post your questions and comments and concerns there. And if they're interesting and pithy, we will read them on the air. That is going to do it for this episode. And by all means, have a fun and safe weekend. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.